Welcome back to our business consultant. Today we have brought you another financial model. This one is Excel financial model for Fintech companies. As you can see, the pink cell tells you about the input cells, the gray cells tells you about the formula cells, whereas the light gray fonts are helping cells. Coming towards the input sheet includes the funding assumption, revenue and cost assumptions, as well as the customer users and marketing budget assumptions, and capex and opex, and working capital assumptions. Coming towards the revenue analysis sheet, the revenue analysis sheet finds your revenue for the company, the total revenue that the company will be earning in the next 5 years, based on the assumptions as well as its cost. Then comes the marketing budget. The marketing budget gives you the total digital marketing cost of the company in the next 60 months. Then comes the startup cost analysis or startup summary. This tells you about highlights on the first month of the company, first year of the company, and tells you about the total funding, total expenses, the total assets, liabilities, and capital of the company in the first year, as well as it tells about the total additional funding that would be required by the company in the first year. Coming towards the financial statements include the income statement, cash flow statement, and balance sheet. As you can see, the income statement tells you about the net income of the company, which is based on monthly basis and yearly basis, going up to 5 years or 60 months. Then comes the cash flow. The cash flow statement tells you about the cash inflows and outflows of the company through its operating, investing, and financing activities. It is also based on monthly and yearly basis, going up to 5 years or 60 months. Then comes the balance sheet. The balance sheet tells you about the financial position of the company by comparing its total assets with its total liabilities and equities, as you can see over here. Then comes the financial analysis. The financial analysis is the most important sheet which helps you to understand and make financial decisions for the company. The break-even analysis tells you about the break-even sales, whereas the company valuation tells you about the WACC, weighted average cost of capital, as well as the expected equity percentage that can be offered to the investors. Then comes the sensitivity analysis. The sensitivity analysis tells you about highlights three main scenario-based analysis that are optimistic, pessimistic, and actual, and gives you the payback period of the company. Then comes the KPIs and ratios. These are all the financial ratios of the company. To make financial decisions, these ratios are really important. Then comes the CAC and CLV analysis. The CAC-CLV analysis tells you about the customer acquisition cost, customer lifetime value, and gives a ratio of CLV over CAC. Then comes the working sheet. The working sheet tells you about the employee payroll, operating expenses, depreciation schedule, and loan schedule, as well as the working capital. These all calculations are being used in the financial statements. Coming towards the last sheet includes highlights that it's a dashboard sheet which gives you all the information in graphical form. It also highlights all the KPIs of the company. As you can see over here, these graphs helps company make financial decisions easily and as fast as possible. That's it. This is the end of the video. Thank you for watching. Hope you like it. Do subscribe and like our videos. Thank you very much.